Insurance has long been about geographical location, which has an impact on the underwriting and pricing of many insurance products. The use of technology to represent the geographical situation has been a rapidly evolving one, starting from a simple digital mapping exercise many years ago. Combining that location with a myriad of other data points has made the information for an underwriter much more comprehensive. Another technology which has grown rapidly in the insurance industry is that of analytics. Evolving from its many reporting functions, the use of analytics in a predictive sense is somewhat more recent. By combining location information with an increasing number of other data points and using the sophistication of still evolving analytics to predict the outcomes of various situations, one has a wonderfully powerful tool set for the insurance industry. Slide, Joe, please. Our two speakers for today are Burke Charlton and David Crozier. As noted, Pitney Bowes Software is the sponsor of today's session, and I'm the moderator. Behind the scenes, Joe Golobic is orchestrating things. Slide. To explore this area today, we are pleased to welcome these two subject matter experts. Our first speaker, David Crozier, Managing Director of BCC Consulting Services, is well known in the Canadian insurance community. In fact, David was a presenter in this same space in one of our previous Insurance Canada webinars. As an implementer and a consultant, David brings a good perspective to our topic today. Burke Charlton is a Global Portfolio Director in the Customer, Data, Location Intelligence line of business for Pitney Bowes Software, where he manages an international team. He has worked in product management with Pitney Bowes for 8 years. With an undergraduate degree in geography, he has a good background for these global geocoding and data portfolios. As someone who likes to break new ground, Burke holds 5 patents in the use of geocoding technology. Slide. In today's session, David will review the industry situation, and then Burke will delve deeper into data and the tools and how they are being used in a predictive way. Without any further ado, David, over to you.
Thank you, Doug, and thank you to everyone who's joined us on the webinar today. Your interest in Predictive Geo Analytics is a sound investment of your time, as analytics has already become one of the most commonly used yet often misunderstood words in the Canadian insurance industry. It is the multitude of forms that analytics can take and the vast array of analytical output and the uses to which that data is directed that can lead to some confusion. Next slide, please, Joe. The insurance industry faces a multitude of challenges. Risk, regulation, jurisprudence, technology, and the evolution of the consumer are but a few. When I refer to the insurance industry, in all cases, for the purposes of this webinar, I mean solely the property and casualty portion of the industry. The P&C industry does include both personal and commercial classes, and in each of those classes, there are lines of business such as property, casualty, automobile, professional liability, and many more. Ultimately, the data the industry builds can span all lines of business, although to be credible, the volume of data required could be so substantial that amassing enough data can take substantial time. I'll need to narrow the challenges down to a few that are affected by or involve insurer data, or that can be meaningfully and relatively quickly addressed by the application of that data. When data is studied, parsed, and operationalized, this is often captured in the term analytics. Analytics can be historical, and it's in this frame of reference that the industry has operated and been somewhat successful. But the explosion in the volume of data in only the last few years prompts us to harness information and make forward-looking decisions, including pricing and coverage decisions based on these predictions. And data is being used in all areas of insurance, from underwriting decisions through the availability of payment plan options and even the level of service customers receive to the adjustment of claims and, of course, to tackle fraud. The overarching challenge is the industry's level of readiness and willingness to handle data. According to a study conducted by IDC Canada on behalf of SAS, released this past Tuesday, Canadian executives realize the importance of real-time data access, analysis, and action, but are not prepared to make the investment necessary to empower their data set. More intimate to the insurance industry, in August, Gartner noted that data integrity, consistency, ownership, structure, and the challenge of freeing data trapped in legacy systems were all issues facing the Canadian P&C industry, and these must be dealt with prior to unlocking the power of the information the industry is sitting on. And in Gartner's words, the Canadian industry just isn't ready. So neither business in Canada in general, nor insurers in particular, are ready to prosper from the power of data analytics. we are at risk of falling behind other countries and, in the insurance industry, behind competing companies. The areas that I will discuss in some detail include regulatory pressure, demands for enhanced governance, the power of competition, particularly as seen through the lenses of business development and marketing, the impact of consolidation on all players, not just those undertaking the consolidation, and the development of pricing, and the specter of catastrophic loss. Next slide, please. Changes to the regulatory regimes under which insurers operate are not new. The financial services sector has been under increasing scrutiny for a long time, and a number of regulatory changes have been introduced. The financial crisis of 2008-2009 heightened the urgency with which some regulators had to make fundamental changes and the zeal with which they attacked the task. Canada weathered the financial storm in better shape than its peers, but even that generates a regulatory response. The Office of the Superintendent of Financial Institutions, or OSFI, has been applauded for the sound fiscal and regulatory policies that it has overseen. This, however, increases the bureaucracy's desire to ensure that they remain prudent, responsive, and always on the cutting edge of regulatory management. Provincial regulators, such as the Financial Services Commission of Ontario, or FSCO, British Columbia's Financial Institutions Commission, or FICOM, and others, keep an eye on developments at OSFI and elsewhere in the financial services universe and want to keep pace with many measures of regulatory reform. OSFI is dedicated to promoting sound risk management practices and to ensuring the risk universe of regulated companies is understood to the best extent possible. Many different guidelines have been brought forth or are proposed that increase the onus on boards of directors to better understand the risk and the business that they run. These include financial and investment risk, underwriting and claim operational risk, and systemic and catastrophic risk that can cripple an insurer. An example of the enhanced oversight that OSFI would like to see from insurers is Guideline B3. OSFI expects that insurers have a reinsurance risk management policy overseen by the board and implemented by management. Oversight, by its very nature, can lead to audit, due diligence on elements of the RRMP that involve the board, and to a deeper questioning around elements of the plan. Boards will not sign off on a plan they do not fully understand and endorse. Weaving reinsurance, investment, legal, and reputational and many other risks into an enterprise risk management plan will increase the burden borne by management in ensuring that these risks are understood and, where possible, mitigated. Management has a vested interest in being proactive, predicting where risks can develop, and in scenario testing to see just how bad any given risk or combination of risks could be. Catastrophic risk is another of OSFI's major concerns. It's long been an acceptable practice to model that peril that is seen as the largest to an organization and to develop a mitigation plan that responds to that peril. Insurers often use Lower Mainland earthquake, Quebec earthquake, or winter storms as the peril, modeling and purchasing reinsurance accordingly. Recent catastrophic activity, particularly multiple earthquakes in New Zealand, concurrent wildfire and flood in Australia, and the earthquake and tsunami in Japan have demonstrated that even cataclysmic events do not occur in a vacuum. Given the increasing impact of climate change, the stochastic nature of storms and even flood activity, and the likelihood of a major seismic event occurring in Canada, OSFI feels that insurers must model for Canada-wide perils rather than specified perils as was the previous practice. This increases the probable maximum loss faced by many insurers. Dynamic capital adequacy tests, or DCATs, are a form of stress testing that demonstrates the impact of certain scenarios on the financial strength of an insurer. Data as close to real-time as possible is required for dynamic modeling. The more accurate, reliable, substantial, relevant, and recent the data, the more credible the output of the DCAT analysis will be. Regulators would naturally have a higher comfort level with an insurer that is on top of their exposure and can prove it, rather than one that is using old or unreliable data or one that cannot demonstrate its grasp on its book of business. Own Risk Solvency Assessment, or ORSA, has grown out of Solvency II, the regulatory regime being developed for financial institutions in Europe. While Canadian regulators have confirmed that Solvency II will not be adopted wholesale here, ORSA is an element that OSFI sees great promise in, as Superintendent Julie Dixon noted to the National Insurance Conference of Canada in October. ORSA places an even greater onus on data, its accessibility and availability for manipulation and analysis than did previous methodologies. ORSA recognizes that different organizations have different levels of, tolerances for, and abilities to assume risk, and seeks to have the organizations make their own case for risk and risk mitigation. Again, however, regulators will feel more comfortable with those organizations that have the best handle on their risks, and that means having control over their data. If an organization is consistently surprised by developments in their book of business, or is always fixing issues with their data, understanding of the location or magnitude of risk, or otherwise uncertain about their business, stakeholders will be forced to view the output of their risk determination and mitigation efforts with some doubt. Like analytics, governance is a nebulous word. As I intend, it encompasses the due diligence with which boards must approach the business, ensuring there is a sound and supported enterprise risk management plan, along with processes and reporting that support the implementation of that plan is paramount. In her remarks to the NICC in Quebec City, Superintendent Dixon pointed to guidelines that spell out the importance of an audit function. She went on to say that larger, more complex organizations would need heightened levels of independence with regard to many risk-related functions, including audit. To ensure quality output from an audit that accurately reflects the risk level of the organization and the sufficiency of mitigation efforts, processes, and reporting, risk and data must be understood. In that same speech, by the way, she discussed ORSA at some length. Next slide, please. We all desire that win at the end of the day, be it offering more valuable services to our customers, increasing margin and making a profit, or better supporting the Canadian consumer and the communities that we live in. That will to win shapes the competitive forces that are impacting the insurance industry today. Ease of doing business is a term thrown around by a great number of insurers. I have yet to find a single consumer, personal or commercial, who says that insurance is an easy purchase and an easy thing to maintain. The best I get is that a transaction wasn't as painful as they expected, which is hardly a ringing endorsement. In a world where you can buy tickets to an exotic destination and check in online, make substantial purchases of goods and services, arrange delivery and installation without ever speaking to a person, and trade stocks on margin from your living room, even government is making inroads on the ease of transactions where insurance continues to fail. This isn't a distribution problem. Direct insurers in Canada buy online options still involve, at some point, speaking with a representative. Insurance is a grudge purchase, one that no individual I know particularly enjoys making. The consumer generally doesn't trust that they are getting a good deal, and the insurer doesn't trust that the information they are getting is 100% accurate. As a result, the process becomes encumbered by numerous detailed questions, background and record checks, and other processes ancillary to the purchase of insurance itself. Analytics, and in particular predictive geoanalytics, can help. By harnessing owned and purchased data, insurers can verify known information and compare unknown information against expectations, vastly improving service and, yes, the ease of doing business. Geoanalytics can also improve the accuracy of underwriting by validating the existence, construction, exposures, and even the occupancy of a location at the time of submission. Brokers and clients alike do not like the negative surprises that can come from site inspections or appraisals, including any resulting changes in premiums or coverage, but neither do insurers. Predictive Geoanalytics indicates natural catastrophe exposures at the time of underwriting, including flood, earthquake, and even potential for storm losses. Increasingly, insurers are promoting claim service as a competitive advantage, given that claim adjustment is often the only interaction that a client will have directly with an insurer. It's also the point in the relationship where the client is most vulnerable, and therefore so is the relationship. Geoanalytics can ensure proactive claim adjustment, sending an adjuster in forearmed with substantial information about the risk and exposures. In other words, analytics can better align response with the expected loss. Brokers always state that communication is important, and so do customers. Knowing the business that an insurer wants or does not want is the first step in efficiently addressing customers' needs. By analyzing their data and projecting their book of business forward, rather than simply relying on underwriting each submission, insurers can make meaningful and informed decisions based on their desired outcome. This saves time, lowers acquisition costs for all parties, and eventually those savings can appear in the pricing or the margin that's available from any given account. As frequently as predictive analytics is mentioned in the industry press, so too is consolidation a topic of discussion. As Canadian Underwriter noted in their September article, The Surge of Mergers and Acquisitions, there is an expectation that consolidation in the industry is on the rise. In a low-interest, low-yield environment, it's even more critical that an acquired book of business have sound fundamentals and a well-understood risk profile. Supply and demand is driving acquisitions to a dear price, highlighting the importance of extracting full value from an acquisition or business combination. Analytics is critical to understanding those books of business and the geographic, class, or line aggregations that would result from a given deal, and the mitigation efforts required to have a desirable risk profile result from the deal. However, companies not involved in the merger and acquisition space can also benefit from the application of predictive geoanalytics. Many brokers and customers are increasingly uncomfortable with the concentration of business that results from large deals. Proactive insurers can use analytics and team with broker partners to analyze elements of the broker's book of business and protect that book from the perceived adverse effects of consolidation. In some cases, this analysis can present an opportunity, as insurers can demonstrate to brokers and customers the benefits of business diversification, all while accurately predicting their appetite for transfer and the ultimate price of the risks being assumed. Next slide, please, Joe. Pricing accuracy is increased proportionally to the accuracy of the composite risk information. While pricing cycles persist in the industry, they are becoming less volatile, driving up the importance of risk selection, adequate pricing, and margin. Using fulsome data but not bothering the consumer with more questions can lead to better pricing decisions, including walking away from certain risks that present an undesirable risk profile or contribute to an unfavorable aggregation. As the customer changes and the Canadian population continues to concentrate in larger urban and suburban centers, the power of data based on the law of large numbers increases. No one likes to be called average, but there are profiles of people, drivers, businesses, and risks that can be developed, better understood, and addressed through predictive analytics and geoanalytics. Predictive geoanalytics and understanding background data can also help an insurer prevent anti-selection, ensuring that the risk is fully understood prior to being assumed, or that certain risk characteristics are not present or likely to be present that make the risk undesirable. In the case of risk selection, the company that knows the least will end up with a disproportionate share of the least desirable risks. Finally, using fulsome data sets can also help ensure that insurers are in compliance with their filed rates where applicable, based on that greater understanding of the customer. Next slide, please. An immediate application of predictive geoanalytics that provides gratifying benefits lies in the realm of catastrophic risk management. As recent events have shown, catastrophic loss still has the potential to surprise. New Zealand, Chile, Japan, Australia are but examples. Closer to home, there have been numerous seismic events in Canada. Depending on your point of view, these are either pressure releases delaying or precursors to an inevitable large event. There's also been floods, fires, and storms for which models are potentially ill-prepared. Taken in conjunction with the regulatory pressures described earlier, it's incumbent upon insurers to understand their aggregation of risk. Predictive geoanalytics can assist insurers in understanding the composition of their book and lead to decisions around appetite, underwriting, and pricing that help to maintain an acceptable level of risk. Accurate data enables accurate reporting and ensures timely action is taken with respect to aggregations that violate the company's risk threshold. Prior to a catastrophe, predictive geoanalytics can assess the probable maximum loss, including the scope of loss. Insurers can better prepare their response to a potential crisis, including the resources that would be required, their financial stability, and any appropriate reinsurance programs and risk cession. Geoanalytics can even assist an insurer in preparing their own business continuity and disaster planning, ensuring that operations continue and customer needs are addressed in the event of a major occurrence. In the chaos that reigns after a catastrophic event, predictive geoanalytics allows an insurer to more quickly and accurately gauge the extent of their losses and generate the appropriate response. From the number and geographic spread, type, and scope of losses to ensuring that claims adjusters respond in the right numbers where the need is greatest, through having a better understanding of the overall impact on the business, geoanalytics offers reliable, accurate numbers in a time of great uncertainty. Just as brokers and customers appreciate communication, so too do other groups and stakeholders. Prior to a catastrophe, an organization having the knowledge of their book and risk sufficient to make accurate and reliable statements about their business will attract the confidence of the market. Post-catastrophe, there is tremendous pressure to rapidly and accurately advise regulators, the investment community, and others of the potential impact on the business. Information abhors a vacuum, and an organization ill-equipped to communicate regarding their business is quickly out of favor with a number of parties. Last slide, please. As I've repeatedly noted, a key to many of these challenges that insurers face is the thoughtful application of analytics. In particular, predictive geoanalytics can be a critical component of the range of products and services offered by a competitive insurer. Used effectively, it can positively impact efficiency, service, and customer experience. Poorly implemented, analytics can prove disastrous. Insurers must first ensure that their data is accurate, structured, relevant, and up to date. Data can prove an expensive and daunting proposition as insurers quickly cross into the realm of needing to know that which they don't know today. A data and predictive geoanalytics strategy is an absolute must, and a partnership with firms providing a breadth of opinion, capability, and tools can prove invaluable. I appreciate your continued interest in the topic and for your participation in today's webinar.
Welcome everybody, this is Burke Charlton. I'm happy to be able to take this next part of the program. We will be talking now about data quality, data enrichment, and geocoding. Next slide. So as we talk about data enrichment and geocoding and data quality, I'd like to start off by talking about the impact of bad data. Bad data is in fact an endemic problem with many large corporations, and it's also a hidden problem. It typically starts with one record and then spreads like a virus across the company. And so the part of data enrichment that is so challenging is making sure the right data gets into the system to begin with. Next record. In fact, it can supply data to every department and organization in sometimes good or sometimes bad ways. As data becomes ever more siloed, as it spreads out across the organization, it can be a simple problem as who is the right customer on the phone, or complex like I cannot get a single view of my customers across the organization. But it affects every department from marketing to underwriting to actuarial to every part of an organization. Next slide. Let's talk about some simple data challenges and an example of a simple table. So for example, as we look at records in a data file, we have problems with misfielded data, with phone records that show up as address fields, or perhaps multiple names for the same customer showing up. And this is just in a simple table. Imagine now that this is perpetuated across the company, then it really becomes a major issue with data. So Pitney Bowes has a platform called Spectrum Data Quality Platform, which allows customers to both cleanse and enrich their data. So this is something that we've gotten more and more involved in. In fact, as we have had insurance meetings with our advisory panel with major insurers, we've been finding consistently that data quality is coming up as a persistent and a serious problem, not just a latent problem anymore, but one that's getting the attention of senior IT executives and marketing people. Next slide. Okay, we'll wait for the slide to build out instead of talking through it, but we look at the non-standard formats, missing data, etc., some of the things that we already talked about. Perhaps some of you, like I have received multiple pieces of communication on the same day from the same company. For example, I have one of the frequent flyer programs I'm a part of. On one of them I'm named Berkeley Charlton, and I frequently get mail to that, but also one called Burke Charlton. I'm a very frequent flyer on this one airline, and it's a little humorous to me that they don't really know who I am. And so this is a relatively innocent application or innocent example. Imagine now that you have customers, one of whom may be a very, very important business customer that spends millions of dollars a year with your company, or quite a high premium customer that insures multiple properties and multiple cars. So you have that on one record, but then this customer is also showing up as someone who may insure a car for their student child who with a small economy car. Does that affect how you treat them when you're not sure of that single view of the customer? This is something that data quality can help and really impact in a great way the value of your data in order to understand who your customers are, a single view. Next slide. Data management truly has become an asset, and companies that understand how to manage their data in good and meaningful ways have a huge competitive advantage over others in their marketplace. And in speaking of insurance, it really affects all parts of the organization, from their relations with customers, relations with their suppliers, and on and on. It's truly an issue that has far-ranging impacts. Next slide. Spectrum is the tool and the platform I'm going to be talking about today, so I won't spend a lot more time talking about it. But Spectrum is the Pitney Bowes. It's the soft foundation for business processes, and that we use for geocoding, for marketing, for various processes all throughout the company. Next slide. As we look at underwriting, from customers through various sales channels, agents, brokers, call centers, direct through the internet, through the various underwriting processes and policy production, we're looking at a really significant undertaking that Spectrum can play a part in each one of these. So what I'm going to be talking about today primarily is going to be from here on is going to be the geoanalytical portion of this, but I really wanted to stress the importance of Spectrum as a really important tool within a company that can help you get through some of these. Next slide. So we look at an underwriting process flow. We're looking at addresses that come in on the front end, that go through, they're cleansed, validated, they're checked for completeness, and this is actually a process flow within Spectrum, within a visual building process that can be modeled and prototyped. These business processes can be modeled and prototyped by the business users and then put into production through IT. So it really allows for quite a bit of interactivity and the ability to be able to see what this process looks like, how it's going to interact with the data, and what the results are before it ever makes it into a production process through the IT department. So this is really a significant development with Spectrum that a lot of our customers have been using, especially in the insurance space. Next slide. So let's just talk about geocoding. Geocoding is a fundamental part of any underwriting and claims management and actuarial application within an insurance company. Simply put, geocoding is the process that assigns a latitude and longitude coordinate to an address or a named location. When I say named location, that could be a building or a street segment or a city or perhaps an actual name of a store or a person. Once that latitude and longitude coordinates assigned, then it can either be displayed on a map or geographic search or calculation. So let's just take a very simple example here. The input, 26 Wellington East, Suite 500 in Toronto. This happens to be the address of the Pitney Bowes software location in Toronto. The output then is now standardized, cleansed, and enriched. So that turns in 26 Wellington Street East, number 500, Toronto, Ontario, with the full postal code now appended onto it, and also the latitude and longitude appended onto that. This is what a geocode gets you. It's far more than just giving the lat long. It in fact it corrects and standardizes the addresses, appends meaningful information onto it, and then adds the lat long. From a data quality perspective, this enrichment also helps to standardize the data so that now that you don't have multiple addresses with different spellings or different standardizations for the same person. It can help to create that single view of the customer, but also now will allow us to be able to append geographic information and do predictive geoanalytics on it. Next record. The components of geocoding, this is an example here from France. I showed that just because it's really the same around the world. The components of geocoding is to standardize the address according to the various country rules. The address is then cleansed. It's verified or validated against postal information typically. So in Canada, we've got great postal system. In the U.S. or various other first world countries have postal systems that these addresses can be compared against. Then they're matched to street data and the local geography to get the geocode, and that the detailed return or the returns of detailed addresses and location codes, which then can be used for additional decision making. Next slide. There's different types of geocoding. The first one and most common for many years was called address interpolation. The addresses are geocoded using a street network which have coordinate information on them. So with an interpolated address, we're estimating where that address falls along a street segment. In this example here, 49 Main Street is approximately halfway into the address range on the odd side of the street. That's estimated. It's not. It's reasonably exact, but there's more accurate ways now to get there. But this is where still quite a few addresses will be interpolated. So next slide. Now in recent years, starting about 5 years ago, point level geocoding started to become very prominent and does give the most precise location. This is an example of a neighborhood with what are called parcel boundaries. The parcel boundaries actually define the boundaries of a housing lot or an apartment lot or a building property. So the dots in the middle are what are called centroids. So parcel centroids are the geographic center of a parcel, and this now has become the most accurate standard for geocoding. And many insurers, I know around the world are not always known for being early adopters, but I will tell you this, in terms of geographic risk and geocoding, insurance has been the absolute leading early adopter for advanced geocoding because the value is so high in terms of the risks that are looked at and analyzed. So point level geocoding is the most accurate way to geocode now that many insurers have adopted. Next slide. With point level geocoding, again, the address is first cleansed, standardized, and then the address is matched to the location either of the building rooftop, which in some cases is possible, or the parcel centroid. The positional accuracy is exact, or as exact as is possible today. So next slide. This is an example of rooftop geocoding in Vancouver. These are the parcel boundaries in Vancouver. You see there's a variety of parcels, and some are large, some small. Sometimes we get asked, well, is this true rooftop geocoding? And I will tell you that based on analysis that we've done, that in cities and urban areas, that most people do in fact build their house right in the center of the lot, in the center of the property. We found that about 82% of all parcel centroids do in fact land on the roof of the property, at least in residential neighborhoods. I think for farms and larger neighborhoods it's going to be a little bit different, but for the vast majority of the properties that are geocoded using parcel centroid, it in fact does land right on the rooftop. Next slide. When geocoding happens, there's various levels of accuracy, and so the logic of the geocoding engine is very important in terms of being able to understand how that happens. So geocoding almost always goes from the most accurate to the least accurate level, starting with parcel point, then going to interpolated, then going to street segment level and parcel centroid, or I'm sorry, to zip code centroid, or postal code centroid, of course, depending on what country you're in, and then to, for example, in Canada, it would go to the FSA level, then to the LDU level, and then on to the city centroid level. So this is an important part of geocoding, knowing that the geocoding engine will start at the most accurate and then cascade on down to the least accurate, depending on the quality of the data that's coming into the system. Next slide. So I won't go through every point on this, but Pitney Bowes Software does have expertise in Canadian geocoding and US geocoding and global geocoding. There's multiple levels supported, from parcel centroid to street address to postal code, street segment, place name, and intersection. As part of this, getting the address corrected and interpreted correctly is very, very important. It combines the street data and parcel data with Canadian CERT-based address range cleansing and verification, full Canadian coverage of both street data and parcel centroid data, wide platform support, all the way from mainframe to open systems and Linux and Unix and Windows and web services support, very high speed for batch and interactive and full web service support, and be able to combine that with real-time analysis, geoanalytical analysis for use in operations. Next slide. So why do you want to geocode? Well, geocoding allows a decision to be made. Most people don't geocode just for the thrill of seeing a latitude and longitude appear on a record. That's really a means to an end. When a record is geocoded, it allows decisions like what we call a point and polygon. What territory does this fall into, or what risk area does this fall into? The distance between two locations, how far away from the nearest agent or the nearest terrorism target? How far from a boundary or a coastline or a brush fire area? These are the types of decisions that get made once a geocode. And the more accurate the geocode is, the more precise those decisions and the more accurate those decisions can be, which is why a lot of insurers have been moving away from postal code geocoding into address-based and parcel centroid-based geocoding to make sure they're getting those addresses correct. Next slide. So now we're going to go into more discussion of predictive geoanalytics and real-time risk aggregation. This is something that insurance companies have been talking about for quite a while, but still, but there's a varying level of adoption of this. I love this cartoon. Where many insurers and their customers are asked to do enterprise risk management, but it means different things to every person. I think there's a body of work and standard practices now that are in fact coming in place that are ensuring consistency for both reinsurance and catastrophe insurance and general underwriting principles. Next slide. So this is a build out, if you could, yeah, thank you. So as we look at some of the underwriting challenges, is that there's a lot of high-end business and homeowner growth in high-risk areas, whether that be flooding areas, coastal areas, or mudslide areas, or areas prone to earthquakes. And this seems to be a growing trend that many insurers are facing. Not only that these catastrophes are happening with frequency, and as they always do, but then there's other considerations that seem to be coming into play, such as the threat of global warming and others that seem to be wreaking havoc on climate and other things. So there in fact is challenges with underwriting. The more accurate underwriting the rules in place can be, the lower, of course, the risk will be. Next slide. So the business focus for underwriting has always been to increase the efficiency of automation straight-through processing. This is, again, a growing trend that requires accurate geocoding. And through that, reducing underwriting leakage, but also retention risk. We've done some studies with customers that have shown that accurate geocoding, just accurate geocoding, accurate territory assignment, accurate risk calculations greatly does reduce underwriting leakage in terms of assigning the correct risk to the correct location, and also reduces retention risk, where people are paying higher than competitive rates because they've been inaccurately geocoded. And the issues with underwriting leakage and retention risk, of course, is that the customers who are underpaying never go away because they're paying less than market rates, and as they compare, they can see that. The ones who are paying too much churn to different competitors and to different companies, and so there's always a downward skew with underwriting leakage to where there's a downward skew towards customers who are not paying as much as they should, and the ones who have been paying higher than expected premiums churn. So this downward skew of underwriting leakage is a major issue that geocoding can help solve. In fact, this alone will help greatly support the use of accurate geocoding. Next slide. So integrating catastrophe management and risk aggregation into the underwriting process. So historically, the geocoding and aggregation of underwriting risk was a back-end review, meaning that properties would get underwritten over time, and then once a year or sometimes less, the aggregation of risk would be calculated, sometimes in response to a reinsurance negotiation. But in terms of looking at the ongoing accumulation of risk during the underwriting process, was never done very effectively, except only maybe by a few companies. This is a big growing trend right now to where this real-time aggregation of risk is happening. It requires accurate geocoding and allows policies and customer segmentation to be looked at in real time to make sure that one very active agent doesn't write 100 properties all in one very high risk area at one time. It allows that real-time analytics to happen. Next slide. So if we look at AM Best guidelines that were put in place a few years ago, which keys to strong catastrophe risk management, there's quite a number of points here which really indicate the importance of high-quality geocoding and geographic analysis. I'm just going to go through these 4 points on the right-hand side that are brought out from this list of AM best practices. Geocode all properties to ensure data quality. And again, I'll repeat that the better the geocoding accuracy, the higher the data quality, the lower the underwriting and catastrophe risk. Monitor accurate aggregate loss exposure on a frequent basis to look at the probable maximum loss. Consider loss scenarios as well as modeled output. Look at what happens in these various modeled catastrophes and other disasters, what happens, and then frequent and consistent monitoring of catastrophe data and compare that with the exposures, the aggregate exposure. So these are 4 things all which are very important that require location intelligence tools or modeling tools and high quality geocoding. Next slide. So the beauty of this is that addresses that are properly geocoded can be geographically compared to hazard risks in real time. So not only for aggregate loss exposure, but now once the rules are put in place, they can be looked at. Are they in a flood zone? How far are they from an exposed coastline for hurricane or nor'easter risk? Where are they in comparison to fault lines, high wind areas, street networks? Where do they fall in the street networks? So these are all compared in real time, and they can be looked at to ensure accurate underwriting. Next slide. When we talk about aggregation analysis and implementation, it's important to monitor accumulations, and there's a number of ways to do this. Most of our customers are using spatial tools to do this, to be able to. This is a visual display. This is a visual display of what happens when catastrophe risk management is enabled. But to be able to look at those exposures from ranging from terrorism risk to flood loss, potential flood loss, to various other types of risk. As these accumulations are monitored and modeled, then analysis can be done on it. And this again is a visual display of what frequently happens in real time on the back end. Next slide. Looking at potential loss scenarios is a really important consideration. This is a hurricane path of one in September 2003 across Nova Scotia, and so the damage zones were looked at and compared to. As we look at the loss scenarios, though, of both in terms of model loss, but also from a claims standpoint, the claims interaction is a very important part, as was pointed out by David earlier. It's the interaction is frequently what happens most visibly between the customer and the company. My house, under just an example, my home recently was damaged by high winds. I currently live in Colorado. I'm a Canada transplant to Colorado, but we frequently get high winds coming off the mountains, and there was about 90-mile-an-hour winds that affected my neighborhood, and quite a number of homes in my neighborhood lost a high majority of the shingles on their roofs. It turns out the shingles were only insured for or rated for 75-mile-an-hour winds, and the 90-mile winds just stripped them off. My insurance company at the time, it took them about a month and a half to realize that there was a high preponderance of roof damage in that area, and I was insured with a major U.S. insurer, and about a month and a half later I got a Dear Customer letter. It's possible your home may have been damaged in some recent windstorms. Other customers using our technology are able to monitor this in real time, and within days of a potential high claims event like that are able to notify customers with nearby agents and nearby roofers or whatever the disaster calls for, and that has a really high impact on customer loyalty and customer awareness of what the insurance company is thinking about them, and also allows these claims to get solved and very quickly, which reduces litigation and additional damage. Next slide. So this is an example of the Grand River floodplain in Cambridge. To be able to look at during say a 50 or 100-year flood, what are the potential properties impacted in this area? To look at those potential loss scenarios and realize in real time that perhaps that there's already a fairly high exposed risk of probable maximum loss should that flood happen, and be able to perhaps set higher premiums or be able to say, no, we're going to stop underwriting in that particular area based on the potential losses that we already face if something were to happen. So this was what can happen now in real time as the aggregation analyses are implemented in place. Next slide. This is an example of Canadian earthquake locations in Montreal, and this is some of the data that is available in the marketplace, and that Pitney Bowes is able to provide is historical earthquake areas throughout the world, particularly good coverage in Canada and the United States, to be able to look at the potential earthquake risk and the loss scenarios that could happen. This is showing an example from our Stratus application, which is an online mapping application. As I look at this, I was reminded I was visiting some relatives in eastern Ontario not too long ago when a magnitude 3.5 earthquake hit, and many people are unaware that this is a major earthquake zone in eastern Canada and upstate New York, but of course also in western Canada there's a lot of earthquake activity that affects many people and policyholders. Next slide. Who would have thought that Canada would Ontario could be a hurricane risk area? But of course, we've seen over the last number of years that hurricanes do manage to make their way up across Lake Ontario, and other, of course, of all the maritime provinces are affected by hurricanes, and so hurricane loss exposure is something that there is data that can be implemented directly into these systems, including data that Pitney Bowes software has available to be able to look at potential loss exposures, but also to be able to monitor, as we looked at the slide earlier, to be able to monitor what's happened during a catastrophe event such as a hurricane, and who to contact, who's potentially been affected, and how to interact with these customers most quickly. Next slide. So this is a really interesting application here, and this illustrates. This is an example from Florida, as you can probably see by the map. But the application scenario is standard across all geographies and in all areas. So this would be a sample decision-making flow for underwriting determination. So first, a rating territory and a distance to coast and potential exposure are looked at. So let's build this out. If you could click, please. So a decision. Is it within 1,000 feet of the coastline? So the answer would be if yes, then is it within 500 feet of the coastline? If it's less than 500 feet, then that will be rejected. If it's no, well, if it's a rule could be put in place. If it's less than 500 feet, automatically rejected in this particular scenario. If it's less than 1,000 feet but over 500, refer it to an underwriter for further analysis. Okay, if it's not less than 1,000 feet, then another decision process. If it's less than 8,000 feet, then a decision can be made. Increase wind and hurricane deductible to the maximum. If it's outside of 8,000 feet, then go ahead and accept it. Now, one thing that's interesting, if you look at the zip code in this particular example, which is a large zip code, which does happen to touch the coastline, some insurers made a blanket statement a number of years ago after Hurricane Andrew that any properties residing in a zip code that touch the coastline would be rejected out of hand. Other companies who had superior analytical capabilities went in and saw that those zip codes for companies that were still underwriting had really increased their premiums to a huge level. We're able to see in this particular example the main populated part of that zip code actually lies outside of that 8,000-foot boundary. They were able to capitalize on increased premiums on that zip code based on the rules other companies had set, and gained a significant amount of market share because some companies were unwilling to write any business in that zip code because it touched the coast, and they're able to capitalize and really be able to benefit from their more accurate location intelligence information. Next slide. So just to wrap up my portion of this, the Pitney Bowes software has a location intelligence suite of products that includes mapping software, both for desktop, online mapping, custom application development through a variety of embedded tools and professional services, spatial analytics capabilities. I've talked a lot about Spectrum today. Spectrum Spatial has mapping tools, program flows, geocoding, the ability to really perform virtually all of the geographic analysis needs that insurers will have. And then MapInfo Manager is a tool to allow you to help manage all of your internal and external spatial data. So with that, I'll turn the time back to our moderator, and thank you very much for your attention today, and I believe we'll have some time for a few questions now.
If you could submit your questions in writing in the question box in the application, and I will then pass the questions on to both David and Burke. Now, while the presentation's been going on, we've had a couple come in already, so I'm going to read those to them. I believe the first one is probably aimed mainly at Burke. It says, we've been geocoding using postal codes. What's the advantage of more accurate geocoding? Burke, can you take that, or?
Thank you. Absolutely. Thank you. That's a very pertinent question, and one that we've been asked a lot over the years. The main challenge with postal code geocoding is postal codes are implemented for the efficiency of mail delivery. They perform a great service in terms of entry-level geocoding, but the problem with postal codes is they change, that they go away, and they're not persistent. So let's take the issue of actuarial analysis on postal code. A postal code becomes a moving target because as it changes, you're not able to perform consistent geographic analysis on an area. Whereas a parcel, centroid, or an address range on a street rarely will change. And in fact, we can safely say that they don't change. And that really allows for more accurate historical analysis and also more accurate geocoding. In the case of Canadian postal codes, if you're able to standardize and get an FSA plus LDU, it's fairly accurate. Some of the FSA areas are quite large, and if you're just getting the centroid of an FSA, it's really not accurate to be able to do the majority of any sort of catastrophic analysis or underwriting.
Thank you. Next one, I guess, could be open to either one of you. Do you see insurers globally increasing their use of geocoding?
David, if you're okay, I'll go ahead and take that one too, since it's geocoding related.
Please do.
Absolutely, absolutely, we do, and there's been quite a transformation over the last few years, and it's really been led by the adoption of global navigation systems through TomTom and Navtech, who have increased their street level accuracy and coverage around the world, and also with the adoption of GIS in markets. So there's been a flood of much more accurate geocoding data that we're able to geocode to, and whereas the leading multinational insurance companies and reinsurance companies that tend to congregate in first world countries such as Canada, United States, and England and France, or I should say UK and France, they've been accustomed to accurate geocoding in their own country, and now they want to take that same processes and procedures and take them out globally. So yes, there is very much an inertia and a movement towards global geocoding applications.
Thank you. I think the next one is probably aimed mainly at David. You can get your crystal ball out for this one. In the future, within the Canadian market, do you see price pressure continuing?
That's a great question, and one I get asked an awful lot. Much like catastrophe modeling, the only thing I can say is every time I answer I'm wrong, so I'll try to keep this rather general. I would say yes, pricing pressure is certainly going to continue, if not get more acute, but it's going to change. I think that precision and speed are what is going to rule. You're going to need to be quicker, more accurate, and respond to both personal insurance and commercial insurance customer needs with a price they can count on. And I do think that cyclicality in the industry will continue to exist because of interest rates, investments, competition. Those forces aren't going to go away, but what we will likely see is a tightening of the standard deviation around the mean, where the mean is rate adequacy. So I think pricing pressure will change. You won't see the volatility that you've seen in some of the soft and hard cycles of the past, but what you'll see is that pressure turn into a need for accuracy, a need for accurate data, and getting it right the first time.
Thank you. We got quite a number of additional questions, so I'll go through them fairly quickly. Next one is, where are you receiving your longitude, latitude information from? Burke, you want to take this one?
Yes, thanks. Sorry, I had to unmute my phone. The latitude and longitude information is coming from a variety of street postal, and so a combination of street networks, postal networks, and also parcel centroid data. At this point, I mean, we use a variety of vendors. I'd prefer not at this point to get into a discussion of which vendors we're using, but we're fairly data agnostic, and we have a variety of vendors that we're using the top quality data from these vendors.
Okay, thank you. Next is there a standard for definition of areas such as floodplains?
So the question is there a standard for definition of area for floodplains? I am not an expert in Canadian flood data, so I would say that the flood, for example, the flood data that we use looks at various elevation risks associated with high water marks in terms of expected flooding within 5, 10, 50, or 100 years. So I know that I believe that there are standards that have been set by the Canadian government in terms of what to expect within various time periods and various flood circumstances.
Okay, we'll
I can chime in and say that mapping is certainly far behind the U.S. And if you have like the Red River Valley, that's been well mapped, but there are other areas that are not. So it's really a developing science, and the Canadian government hasn't spent a lot of time addressing.
Okay, because we're pretty well over time, I'm going to run through the next ones. Does your software offer reverse geocoding capabilities?
Yes, 100% available in all countries that we support. So we offer full reverse geocoding capabilities in Canada and in every other country. And reverse geocoding, for those of you who are uninitiated to that, is the opposite of forward geocoding, where we're taking an address and getting a lat long. A reverse geocode is taking a latitude, longitude, and then getting an address from that. This has become quite popular over recent years with the proliferation of mobile devices, such as cell phones and iPads and other things, which return latitude and longitude information that then can be converted to an actual address.
Okay, thank you. And this will be the last one. Are there any significant caveats to relying on geocoding?
So, David, I'm sorry, it looks like I'm going to have to answer this one too.
He feels really bad for this.
Okay. The biggest caveat that I would say is really, I would say, is very vendor specific, and the absolute kiss of death for geocoding is getting false positives. And a false positive for geocoding is defined as when the software or data tells you that you got a highly accurate match, but in fact it was an inaccurate match at the wrong location. Consistently, I'm hearing that insurers would always rather have a slightly more generalized location match, such as a street segment or a street address, than to have any doubts about the accuracy of a match. So I would say that the caveat is be careful what you use for geocoding, because a number of customers have let's say, for example, decided to go with online mapping tools in order to do their geocoding, and which can provide some value, but their focus is not on consistent and verifiable accuracy. It's really about getting as many eyeballs they can on a web page. So what I would say is that false positives are a major caveat, and you need to be careful to make sure that you're minimizing false positives with high quality data and vendors.
Thank you. Thanks, Burke. David, I'm going to turn it over to Doug to close this off now.
Thank you very much, Joe. On behalf of our audience today, I would like to thank our sponsor, Pitney Bowes Software, for making this webinar possible. David gave us a broad but definitive perspective on the forces driving all companies to better understand their business in detail, and not only that, but to be able to communicate it well. We appreciate the synopsis of the current situation and the driving forces behind it. Thanks to Burke for taking us deeper into the issues of data quality, and how these underpin the tools that take the data and transform it into useful information. This information in turn helps address some of the issues David described. If you would like more information about today's materials or the products and services behind them, please contact Pitney Bowes Software as shown on the slide. As you take the survey, as you leave the webinar, you can request the same materials there. A thank you note will be forthcoming over the next couple of days. And on that note, thanks for your attention. And we all of us who participated today, wish you and yours the best of the season. Thanks, and have a good time.